Good morning, good afternoon, and welcome again to the latest ADM Agriculture grain market update. Well, another very interesting week in the markets. Weather and politics continue to be the focus for the grain markets. I suppose comment on weather first. The situations in Canada and I guess with the US spring wheat states have improved a little bit as harvest rolls out up there, and North American wheat output is probably going to be a little bit higher. The Russian crop as well is being talked higher, and this combined with a better outlook for Australia is probably now putting the global wheat S&D much more comfortable. You know, we're in a different place to where we were 6 months ago, and I would say the global wheat S&D now looks fine. On the other hand, the corn market looks very different. We've had very dry conditions in Europe, a crop now that is going to struggle to get to 50 million tonnes. And the EU is going to have probably the lowest crop it's had for 15 years. So we're going to have to see some demand rationing or some significant volumes come out of the Ukraine in order to solve the balance sheet. And it's that Ukrainian issue that continues really to buffet market direction. Russia have been sounding off this week with accusations that the West are not honouring their commitment on agricultural exports and ensuring that developing countries are getting Russian wheat, and are now threatening to end the export corridor in October if the Western governments don't play ball. This prompted a sharp rally yesterday in all grain markets, and the global corn balance sheet in particular really needs these Ukrainian exports, and certainly the wheat balance sheet can't really afford to see any significant volume of demand moving from corn to wheat. I suppose closer to home, if we look at the wheat market here, we're still being dominated by currency moves and the ongoing question of what are we going to do with our exportable surplus. A further revision, upward revision to the UK crop size. I think we're now pegging it at around about 15.8 million tonnes and a surplus of a bit over 2 million. We're not really making a lot of headway with it. Even though we've seen a sharp drop in sterling, we continue to struggle to generate any significant volume of export demand, apart from an odd cargo or two creeping away. Yes, there is some underlying demand for UKS, and yes, there's some underlying demand for feed wheat, but Russia isn't helping into North Africa for UKP type specs, and Denmark keeps undercutting us on any significant volume of feed business into North Spain. So tough times. From a technical point of view, I have our technical wizard sat next to me again. The market is been interesting, but still range bound. How are you seeing things, Freddie?
Yeah, thanks, Jonathan. I completely agree with you there, to be honest. So we saw the conclusion of our Elliott wave theory pattern back in the middle of July. And since then, we've been really range bound in this sideways channel between 255 and 275 that you can see there on the screen. And to be honest with you, it's worked really neatly technically. We've gone from the bottom to the top and vice versa within this channel over the last month and a half to 2 months. Yesterday, we tried to break out of that channel. We traded at 275 on the London NOV 22 daily, as you can see there. Failed and pulled back into the channel. So it'll be quite interesting. We're at the top of the channel now. Do we break through that and build in a little bit of a more positive note to the technical market, or do we continue in this sideways range trade back down into the low 60s, maybe even to the high 50s? I think the one point I would add from a study perspective is you can see relative strength index RSI on the bottom there. That did pull out of oversold yesterday. Now, in isolation, that's a pretty weak indicator, but I think if we saw a breakout on that top side of the channel above 275, combined with that breakout from oversold on RSI, then there's a potential for a little bit of an upward move with overhead resistance at 285 and then 295. But yeah, quite an interesting market, sideways for the last 8 weeks, and potentially something happening at the moment. Either we maintain this channel or we potentially have a little bit of a breakout, but we'll have to wait to see how we go on that.
For sure. I think in summary, on the macro level, I think the increased availability from Russia and a better looking situation in the US and Canada probably means that there's enough wheat in the world. However, market direction from here is crucially going to depend on what happens on export side of Russia and Ukraine. Certainly, Ukraine's export capacity has the potential to ship much larger volumes than we've seen so far, but this shipping corridor has to remain in place, and domestic and internal logistics have to improve if there is going to be a jump in these volumes. Certainly a tough market to call at the moment. Well, look, that's all from us for this week. Thank you very much for tuning in and watching our video. As always, we're happy to take any questions or comments. Our contact details are at the end of the video. Thanks again. Thanks, Freddie.
Thanks, Jonathan.